What is going on? Welcome back to the channel. So today we're going to talk to you about Opendoor. I want to go over some of the data points, what's moving it, and go over everything else you need to know. But first, make sure to hit that thumbs up, and with that, let's get right to it. So at the time of doing this video, Opendoor is turning from red to hopefully green. So it's kind of flirting a little bit with that. 506 the high, 481 the low. So there's a hell of a lot of fear in the broader market. But as I've mentioned in previous Opendoor videos, things are actually doing fairly well. I know a lot of people like to generally complain about a lot of things, but Opendoor over the last 5 days is pretty much flat. So it's down, I think, like 1%. And given what's happening in the broader market right now, I think that's definitely deserving of a round of applause. NASDAQ just today is down 1.37%, S&P down 1.15%. A lot of that fear is because of data as well as Google's earnings, as well as that whole Fed chair kind of discussion, which is kind of underway. So a lot of grayness. But even for the data points today, challenger job cuts came in at 108, forecast of 43, initial jobless claims 231 versus forecast of 214, and then the jolt numbers, because of the whole shutdown concluding, we did have it come in at 6.5 million versus 7. So of course all of this data isn't the greatest, and you can kind of tell that there is a little bit of fear in the market, because in the past market would pounce over the kind of idea of spinning this all as a positive to justify rate cuts, because in theory this is exactly what Powell said, as labor is stagnant if not improving. Well, this pops that mentality. So I think in general we could be seeing some more optimism for a March rate cut, and that might be potentially a saving grace. Just we have a lot of big data coming out tomorrow, and so tomorrow's data could really be that deciding point to push things higher. Aside from that, there really hasn't been that much in news from Opendoor, except for just the announcing their earnings. So that should be a pretty good catalyst in among itself. There hasn't been any new analyst ratings, but I did notice that analysts have become a little bit more bullish on Opendoor. And so for instance, the revenue is currently sitting at 594.12 million. Previously it was 587. So a couple analysts did actually upgrade their revenue estimates, so that's kind of a good thing in my opinion. So going into this upcoming earnings, -9 cents for the earnings per share, and then 594.12 million for the revenue. Over the last 90 days, you have 1 positive, 3 negative revisions to the earnings per share. So analysts are quietly becoming a little bit more optimistic and bullish on Opendoor. Aside from that, looking at shorts, so right now you have shorts returning about 56,000 shares. 15.4% of the free floats being shorted, works to be 121 million shares overall are being shorted. So shorts are very active, as you can kind of see right here. Shorts are kind of increasing. So at the peak they were increasing about 987,000 shares, just abruptly returned. And this is why you're seeing a nice little push higher. So Opendoor shorts are returning, kind of pushing it a little bit higher. So all in all, pretty good stuff. And even on my watch list, Opendoor right now is the only stock that is green. So definitely something to take note of though. Looking at this, the options, 1.3 million in calls, 701,000 in puts. 34% of all the options being done are neutral. And the reason why it's neutral is big money is actually kind of getting in on the options, so much so that it's actually eating up the bid and the ask. So a lot of platforms such as Unusual Whales have a hard time distinguishing whether that's bullish or bearish. Looking at the expected move post earnings is 15.88%. So that's roughly a 78-cent move in either direction. So post earnings, you could see a lot of volatility. Let me know if any of you are kind of playing Opendoor's earnings through options. On a side note, going back over here, there really hasn't been that much in posts from 𝗧𝗧, and actually Twitter's been kind of not really working for me all that much today for whatever reason, but there really hasn't been that much in posts from 𝗧𝗧, so he's kind of gone a little bit silent. So again, no news or any kind of posts as well. So just wanted to kind of cycle back to that. But from a bull standpoint, you do see a consensus for it to be above roughly 5 to 550. So we're pretty much heading there. Bears are anticipating for it to be sub 450, 450 to 5. So definitely there's a little bit more upside than down. Right now, a small handful of transactions occurring on the secondary market. So surprisingly enough, you are seeing big money buying the Opendoor dip. Nothing massive, so not rows and rows of transactions, but still good to see institutions buying. And this is no different than what I've mentioned over the last couple of videos. A lot of this sell-off has been linked to algorithmic trading, so rather artificial if you kind of think about it. From a dark pool, this is a little bit more active today, so a lot of these transactions are linked to shorts, and of course, as I kind of showed you, shorts are fairly active, so a lot of this is kind of linked to them. But right now with it at 502, it is right below this S1. So 507 kind of the high for today. So this S1 has been hit. Similarly, this S2. So we do know that this is a pretty good support level. So that's again something pretty positive. So keep that in mind if you want a dollar cost average. So 480. If that unfortunately does fail to hold, then 442. Is pretty much the next strong support. Aside from all of that, quickly popping over here on the chart itself, again, I know a lot of people are like to complain about various stocks, but a lot of stocks and a lot of growth stocks are actually breaking below the 200-day moving average. So things are really kind of getting negative, but in Opendoor's case, it is still holding up. So it's actually wasn't really tested. Last time that 200-day moving average was tested was way back here, July 16th, 2025. So Opendoor, yes, has gone down a significant amount over the last little bit. So even from January 23rd to now, it's down 21.96, but in comparison to a lot of other stocks, it's actually doing very well. I know I kind of mentioned that, but sometimes needs to be reiterated. But aside from that, stochastic RSI very oversold, so it bouncing off of that key support level is also going to really help it push higher. Nothing significant, so you're not going to be seeing that 50-day moving average hit today, unless, you never know, maybe some news does come out, but at least you could be seeing a nice little push higher. There hasn't been any new analyst ratings, no articles really coming out about Opendoor, so everyone and their dog is just waiting for their upcoming earnings just to see what they give for future guidance, how things are, and everything else. So let me know your thoughts on Opendoor. Are you buying the dip? Are you selling? Do you think post earnings is going to just really just go down significantly? Or what's your kind of general thoughts on all of that? One final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put out daily day trades, numerous swing trades. Worthwhile to pop over there and check that out. With all that, appreciate all of you watching.